Alright guys, and here on our news it says Japan decides the fate of XRP today, and here's what is coming. So today, Japan stands at the absolute center of the crypto universe, with millions of XRP holders watching every move made by the Bank of Japan. Could a monetary policy decision in Tokyo dictate the long-term adoption path for Ripple's ecosystem? So let's examine what's happening beneath the surface. So let's start about why is everyone looking at Japan's central bank right now. I see this moment as a classic collision between global macroeconomic policy and digital asset infrastructure. Most casual retail investors focus purely on localized price charts, but institutional capital flows according to global yield differentials. When Japan moves its interest rates, it alters global liquidity streams across every financial asset class. The focus on Japan isn't random. Crypto analyst here, Stellar Rippler, pointed out here on X that Japan's recent Bank of Japan interest rate decision serves as a pivotal focal point for XRP holders. The core argument is straightforward, where the size and pacing of any interest rate adjustments directly influence how quickly institutional initiatives tied to Ripple's cross-border payment ecosystem scale up. Now, if interest rate shifts remain minimal or delayed, the expansion of these institutional initiatives could experience temporary friction. Conversely, significant policy adjustments could clear the runway for a historic period of long-term utility growth for XRP. A complex web of regulatory clarity, banking integration, and institutional adoption is all converging on Japan simultaneously. Now, how does Japan's legal infrastructure give XRP an upper hand? Now, my opinion is that regulatory certainty is the single most valuable currency for institutional adoption. While other major Western nations have spent years locked in courtroom battles and regulatory ambiguity, Japan quietly built a bulletproof environment where Tier 1 banks can execute enterprise-grade blockchain initiatives without fear of sudden enforcement action. Unlike jurisdictions that are still actively debating digital asset definitions, Japan established comprehensive, crystal clear rules years ago under the Payment Services Act and the Financial Instruments and Exchange Act. This legal framework gives institutional players absolute regulatory clarity. Now, because Japanese financial institutions operate with explicit guidelines, they have been able to build real-world blockchain products directly into traditional banking rails. That legal foundation is precisely why giant conglomerates like SBI Holdings have been aggressively in building out the XRP Ledger infrastructure across Asia. Now, what role is SBI Holdings playing in building the XRPL ecosystem? I believe SBI Holdings acts as the primary engine driving XRP's real-world financial adoption in Asia. When a multi-billion-dollar financial group actively integrates a ledger into its day-to-day operations, it stops being a speculative token and becomes critical financial software. Analyst Stellar Rippler highlighted SBI's continuous expansion efforts through SBI Ripple Asia. The group is not merely holding tokens, they are embedding the XRP Ledger directly into core financial infrastructure. Beyond cross-border settlement, SBI is involved in advanced ecosystem developments, including institutional yield mechanisms through protocols like Doppler Finance, as well as privacy-focused features on the ledger. Even more remarkable is that certain traditional Japanese banks are offering retail products where customers can convert a standard deposit interest directly into XRP. This bridges traditional commercial banking products directly with distributed ledger technology. Now, could the yen carry trade create short-term turbulence for XRP? I think it is essential to remain grounded in detach from purely bullish social media hype. When central banks raise rates, global liquidity shifts, and that process can be volatile. It's crucial to separate short-term price reactions from long-term institutional utility. While social media commentary often frames central bank moves as an immediate green light for asset prices, the broader macroeconomic reality is far more intricate. Raising interest rates in Japan can trigger an unwinding of the yen carry trade. For years, global funds borrowed cheap yen to fund risk investment worldwide. When Japanese rates rise, borrowing becomes more expensive, forcing investors to pull back global liquidity, which can place temporary downward pressure on risk assets, including cryptocurrency. Therefore, the immediate market action to macroeconomic policy can easily diverge from optimistic expectations. However, long-term XRP advocates maintain that sustained banking integration, structural legal clarity, and enterprise ledger utilization carry far more weight than short-term market swings. Now, how do XRP ETF expectations fit into this global puzzle? In my opinion, an ETF is simply an institutional bridge, combining the prospect of spot XRP ETFs with Japan's operational banking infrastructure create a powerful two-front growth model, one driven by Western Wall Street liquidity and the other by Eastern operational banking utility. Analyst Stellar Rippler noted that pending XRP spot exchange-traded fund applications add another major pillar of optimism to the equation. When you line up Japan's established regulatory framework, SBI's ongoing XRPL ecosystem expansion, and the potential influx of spot ETF approvals, you get a uniquely supportive long-term background for the asset. And finally, here is our overall conclusion. When looking at the big picture, Japan's financial environment represents a massive proving ground for real-world utility. While short-term macroeconomic shifts like central bank interest rate decisions can create temporary market volatility, the underlying structural foundation remains strong. The combination of clear regulations under the Payment Services Act, deep banking integration via SBI Holdings, and incoming institutional investment products positions XRP as a core asset in the evolving financial landscape. Therefore, the key is watching how these institutional rails continue to expand regardless of short-term noise. Alright, and this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.